And they're warning us, inflation may be volatile over the next year. But frankly, it's not like prices go up and then prices go down. Prices go up and then they go up and then they go up and then they go up. You see what I'm saying? So this is all garbage for sure. And you have to think about it. So I want you to know that we all of us have been warned about the massive inflation that he knows is coming between the Treasury deluge and the government and their own deluge. I mean, it's everybody's working in concert here, and boy, they will push that inflation because they don't have any other tools. So inflation has surprisingly flared up in the past year. You see, here's the point. They don't know what they're doing. It is all experimentation. This is why gold is so important for you to have in your possession, because everything else is counterparty risk. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer, and I really hope that you have your physical gold and silver already established, because inflation, obvious inflation, is definitely on its way. Here's the key, because rates are rising globally. This is not just happening in the US. This is a synchronized movement. So we need to be aware of that. But the yield, the dividend yield, is at 1.57 on average on the S&P 500. So when we get 10-year yields near that level, that's why you're seeing the stock markets decline. Because the bond markets are saying this inflation is not good. I don't care what Fed Chair Powell says. It is not what's about to happen. I mean, it's a tsunami. The system is breaking down. What can I say? So I guess this is all about inflation today, pretty much. According to a report I was listening to this morning, there are 20,000 of those containers, you know, those big, ginormous containers that you see on the back of semis. 20,000 of them are part of the ship that is lodged in the Suez Canal. So be prepared to point for fingers to be pointed to say, well, that's what's causing the inflation, and very well it is. Shipping costs are going up, oil is going up. We just passed almost a $2 trillion stimulus bill on top of all the other ones that we've passed, and we're going into an infrastructure bill that is going to add roughly another $3 trillion. How are these things going to be paid for? More and more debt. But ultimately, it has to be passed on to the taxpayer. And that is part of the inflation too. And that's why I said at the beginning of the show, you better have your gold and your silver. Additionally, what keeps coming up in different things that I'm reading is the loss of confidence in the Fed's ability to manage the soft landing and control inflation. The Fed has lost all credibility. That's not a good thing. Now you, as the general public, probably aren't aware of it, and so you might not think it's a big deal. But again, this is a con game. It requires confidence. And if people lose confidence in those that are the central banks or the governments or these institutional agencies, then what do? They make different choices, don't they? Frankly, I lost confidence a long time ago. It's why I do silver and gold. Consumer sentiment is a reflection of the confidence, and I think that it should be pretty obvious that it is near all-time lows since they started tracking it back in the 40s. This is not really a good thing. I will point out where it was during this transition right here when we transitioned fully off of the gold standard and we were dealing with a lot of inflation. again, and here this is 2008, 2013, and you can see where we are. So this is during crisis, and during crisis. So we still have on real estate, on the producer price index, etc., oil, we still have a lot of inflation ahead. Somehow, the central banks think that this is magically going to reduce and evaporate the second half of this year. I call crap on that. You could quote me on that one. Macy's tried to raise prices on some of their goods, but shoppers actually pushed back. Not so much on the upper end, because after all, those studies have shown that, boy, inflation does impact those at the upper end, but it's not, we can deal with that. Listen to Lloyd Blankfein. We can deal with inflation. Yeah, if you have enough money and your income keeps pace or does better than that inflation, then until all confidence is lost and we go into hyperinflation, I mean, you're not going to have to choose between putting food on the table or a tank of gas like many people. But consumers do have to cut back if things that they need cost more and more. With the Fed committed to fighting the inflation that somehow magically they didn't cause, but they did. They absolutely caused it. Well, they've started to raise the rates. I don't think they're going to go very far, and this is why. This is margin debt, so borrowing to buy stocks. And, you know, it's kind of, this is such an interesting chart, really, because this is the Wilshire 5,000, which is 5,000 different stocks. And you can see that that used to be above the margin level, and then after 2008, or just before that, that shifted. And all of a sudden, you have margin debt growing faster than you have stock market rises. And then look at where we are now. Absolutely overlaid on each other. And so all of this talk since November about raising the rates, what Powell was attempting to do and what he is still attempting to do, though historically it's never been done before, and I don't think this time is different because this is the end of this whole fiat money cycle, the current one, is engineer a soft landing. So by telegraphing that he's going to raise rates, well, then you can close out or reduce your margin exposure. But when that happens, the stock markets have been struggling since 2022, haven't they? So if he continues to raise rates, and he will, at least for a minute, I don't think he's going to do it through the end of this year, but we'll get a few more rates in here, at least 2 anyway. But the Bank for International Settlements, which is the central banker's central bank, just came out with this speech on the return of inflation. Because, boy, I mean, look at the purchasing power chart. They were able to keep inflation low enough, long enough, that people got used to it. In the 70s, it was a dirty word. I can tell you, I was there, and anybody else that was there that's watching this can verify. Inflation was a very dirty word. Then they pushed it down our throat that inflation would save us. Well, now we've got the inflation. Do you think it's saving us? The return of inflation was almost universally unexpected, including by the biz. Well, if you've been watching my videos, this was not unexpected, particularly when they went to that average of 2%, because I said, watch out. That means a lot, and we're about to be walloped with inflation, as we are, because inflation is more broad-based, right? Wage inflation, services inflation, goods inflation. Since the start of 2021, the share of items in the consumption basket that have seen very large price rises has increased steadily. Yep. And that's the key to de-anchoring the in the inflation expectations. And let me tell you, when confidence is gone, and we're so close, when the public loses confidence in the central banker's ability to control this inflation, and there's been a bifurcation where you have some advanced economies tightening, in other words, raising interest rates, and others lowering interest rates, right? But even those that have raised interest rates have not had very good luck, see Mexico, on containing the inflation, among one. Okay, so it's broadened over time, and I'm thinking that this is the beginning of the hyperinflation. And that's why I'm saying we have run out of time. Get it done. Food, water, energy security, barterability, wealth preservation, community, and shelter. Get it done. If you don't have gold and silver, get it. Physical, in your possession. Oh, it's so inconvenient that I have to hold this. If you don't hold it, you don't own it, regardless of your perception. It means nothing in reality and also in a court of law. Central banks saw inflation like this in the 1970s and know how to avoid a repeat. Just as knowledge of the Great Depression helped them avoid a repeat in 2008, that didn't make the experience any more pleasant. I got to unpack this statement here because it's incredible. All right. Central banks saw inflation like this in the 1970s. As I just said, what's happening in the 1970s? We were transitioning from a gold standard, completely from a gold standard to a debt and inflation standard. That's what was happening. Well, guess what? We're transitioning into a new monetary system right now, a new social, economic, and we did there too, social, economic, and financial. That all happened in the 70s and the early 80s. Absolutely. So there you go. And know how to avoid a repeat. Okay, well, Paul Volcker cranked up overnight rates to 21.5%. Do you see Fed Chair Powell doing that? I don't. But right now, with the world awash in inflation and global central bankers really battling or raising rates to battle the inflation they created with all their money printing, okay? So we have European problem, which creates pressure on the euro, which sends the dollar higher, right? Because if this is the euro, this is the dollar. When that gets weaker, the other gets stronger, which worsens the manufacturing cycle, which does the whole thing again. But is the Fed going to pivot with spot inflation at an 8 handle? And actually, it's at a 9 handle. Is the Fed going to say, okay, let's weaken the dollar? No, because it actually helps when we import goods and our dollar is stronger, it makes those goods look cheaper to the U.S. public. So it's kind of good or perhaps helpful for inflation. Central bankers are out of tools and there is declining confidence in them. Actually, there's only one vestige of confidence left, and that's the public. The surging dollar stirs market buzz of a 1980s style Plaza Accord where the dollar had gotten really, really strong. Really what's important here is the reference to when we were transitioning into a new system. Because I don't hear anybody on Wall Street, the CNBC, those talking heads, Bloomberg, etc. I don't hear any of them talking about the transition in monetary system that took place because they don't want to bring that to your attention. But I'm talking about it. I'm bringing it to your attention because every time they reference back to that period of time, that's what was happening. We were transitioning from at least a quasi-gold-backed system into a full debt-based system controlled by the central banks. And the central banks, I mean, more and more, I'm reading how they are getting all of their money printing is getting blamed for this inflation, as it rightfully should. that inflation, if you've been listening to me for a while, you know darn well, all of that money printing inflation was held inside of the stock market and the bond market and the real estate market. Those markets that they openly and overtly targeted for reflation. But, it was artificial. And so now we're all going to be paying the consequences of it. Well, this is the purchasing power of the euro, right? Well, what? Has it been going up? Has it been getting better? Sometimes the euro was stronger against the dollar. No, it's just steady downhill. And then this is the U.S. dollar's purchasing power. I just did it so that you could see that it may be stronger or weaker. That's just so you look over here instead of you look at what's really happening. And that is that all of these fiat monies, by design, are losing purchasing power value, and 1 trillion times zero is zero. But gold is the proven inflation protector. They can manipulate these markets any way they want to, but history shows us over and over and over, 100% of the time, that physical gold in your possession protects you. Not just from inflation, but from all the garbage that's happening with all of these governments as well. You remember that Biz report. I'm so glad that they did it. Because perception management, if they can manage how you perceive what's happening, then they can manage how you move through this. And what they want is they want you to keep everything in their system, because then it's easy to take away from you. And who do you have to blame? And who are you going to blame to anyway? Who are you going to complain to? Who are you going to call? Nobody. And you're not going to call Henry Kissinger either. But I did want to remind you of this because I think it's critically important that you understand that this is all about the spot market in gold and the stock markets and the crypto market. It's all about perception management. And as Kissinger so brilliantly said, it's not a matter of what is true that counts, but a matter of what is perceived to be true. So as long as they could keep inflation at a level that you didn't really notice, your perception was that, it's not so bad. I don't need to ask for more money. But with hot inflation running like it is, 8, 9, 10%, 20%, 40% in some cases, pretty noticeable. And more wage earners are asking for more money. And hey, were we not recently told that we needed more unemployment to tame this inflation, and we're getting subsequent layoffs in different areas, etc. But let's just stay on this for a minute, because this goes back to 1993, the great Alan Greenspan, who my mom used to say, don't you think he's smarter than you, Lynn? And I used to say, I hope so. Because he certainly has a lot more influence than I do. But if he believes the garbage coming out of his mouth, then no, he's not. I know he didn't believe what was coming out of his mouth. But he did believe this. If we are dealing with psychology, then the thermometers one uses to measure it have an effect. What would happen if the Treasury sold a little gold in this market? There's an interesting question here. Because if the gold price broke in that context, the thermometer would not be just a measuring tool. It would basically affect the underlying psychology. They do not want you to hold gold, because when you hold physical gold in your hands, they can't see anything. They can't track anything about it. And you are protecting themselves. You are voting with your purse. That's the way we have to vote. If you buy their products, if you hold their products, if you keep that portfolio intact of stocks and bonds and ETFs and mutual funds and annuities and all those things, you're voting with your purse. You say, I believe in this system. Well, I don't believe in this system. I don't believe in it at all, because I've lived in it my whole life and I understand the loss of that value. And I understand that wealth never disappears, it just shifts location. Well, fine. Then I want that wealth to shift my way. Because at the end of the day, somebody owns everything that there is to be owned. And if you don't own it, that means you have to rent it. You have to lease it. And guess who gets to choose how much you're going to pay? You have to decide if that's okay with you. It's not okay with me. So tell me what you're experiencing in Bulgaria with the energy crisis and with the inflation, if you don't mind.
Sure. I mean, well, I can start with some inflation data and just boots on the ground, citizen journalism type of information.
Perfect.
The year-to-date inflation, July 22 back to December 21. So year-to-date, we're being told here in Bulgaria is 11%, and the average annual inflation for the year is expected to be around 14%. So, which is interesting because it's just as ridiculous as the inflation numbers that we're getting out of America, as far as I can tell, right? So, yeah, so they're calculating. It's all the same kind of funny balloon. We're part of the European Union, so we do things just like America does things. So they're telling us that in June we saw a spike to 17%, which is the highest in 24 years for this country. They're saying that the biggest contributor to that was transportation costs, which was almost 40% increase, and what the government calls household bills, which is about 18.5% rise. The food they report to be up.
Right?
Sorry, 18.5%.
18.5%.
What they call household bills. Yeah. All lumped together, right?
Of course.
We can talk about energy bills separately, but food, they say, is up 24% in June, which is an interesting number. I actually buy that number.
So
the government raised the debt ceiling.
Of course they're going to raise the debt ceiling. It's all they can do. If you like this, please give us a thumbs up. Make sure you share this information. And I think people are becoming more open that would not have been open to hearing it before. This inflation, I say thank you for it because it's starting to open a lot more people's minds. And until next we meet, please be safe out there. Bye-bye.